Protecting your wealth, the best store of value. Hey everyone, it's Wolfgang. So we're getting towards the end of this year already. The year's gone by pretty fast. It's probably important to take a look at how our portfolio has done, what we should do, what we should be thinking about to protect the gains that we've had this year, because most things have done quite well. And by the way, disclaimer, please seek investing advice from your investment advisor. Nothing that I'm going to say should be taken as an investing recommendation, okay? We're just talking in general terms here about markets. Okay, so investing conditions right now, okay? Yesterday, Friday, November 7th, the VIX rose to 22. The volatility index measures how investors feel about investing, okay? Anything over 20 means that there's some volatility expected in the market. And so investors are uncertain, and generally this is, sort of an expectation for the next month or so that the S&P 500 will fluctuate and may not be investable, or will be a little bit dicier than people prefer. A VIX below 20 is preferred, okay? So we got to over 20 yesterday in the market. The market's closed today, obviously, it's Saturday. So keeping your wealth stable. Okay, so most assets have done okay this year, so should we change our emphasis to stability from growth? Should we switch from growth to stability? Answer, maybe. It depends on your conditions. We are at the end of the year, right? This is getting close to the end of 2025. Hopefully your wealth is diversified among different assets. That's always a good idea. So what happens towards the end of the year? Well, some people will sell their underperforming assets to, tax loss selling, right? So let's look at some specific areas to invest or where you might consider holding your investment. Again, we're looking for stability. We're changing from growth to stability. You don't have to, obviously, but is it a good idea because we're at the end of the year? Yes, it probably is, because most assets have done well this year. For example, gold has fluctuated around 4,000 for the past month, okay? Generally, gold is a stable asset. Again, we're looking for stability. Gold is generally stable, but it rose from 2,700 a year ago. So in the last year, it's gone up significantly. So the stability is the same picture that we've had with gold in the past. Who knows? But that's a big run up, 2,700 to, it got as high as over 4,300 pretty recently. So that's kind of a run up. So it may be iffy to buy more gold right now, but if you bought gold in the past, good job, because it's generally a stable asset. It has run up a fair amount though, okay? Let's take a look at real estate, another asset that gets a lot of investment. Some real estate has done well this year. Other real estate like office space has not done as well due to high interest rates. So the reason that office space has not done well is, the work from home is one thing, but also refinancing real estate debt when interest rates are high, not so easy to do. So a lot of office buildings have been sold far less than their value just a few years ago. That being said, U.S. housing is up 3% this year. Pretty darn good. Considering the state of real estate and high interest rates, I'll take it, right? 3% rate of return on housing, U.S. housing, not too bad. Okay, so residential has done okay. Office space, not so much. What about U.S. Treasuries? Again, we're looking for a way to stabilize our wealth, our investments. Treasuries are stable, right? So the return may not be spectacular, but the stability of a U.S. Treasury investment, it's really hard to beat that, okay? If we're looking for a place to park for a while, just to, because the VIX is kind of high, and we've had a good run so far this year, U.S. Treasuries, not such a bad idea. There's stability there. Having stability right now is good. You can invest and rest, right? You can buy a year or less in duration, especially on the secondary market for treasuries. You can buy U.S. Treasuries and sort of invest the money and walk away from it and just let it do its thing. Your money will grow in value. The return's not great, but it's very stable, and the money is growing. As an example, Berkshire Hathaway has up to 90% of its cash invested in short-term U.S. debt. 90% of $341 billion, I think they have in cash, is invested in treasuries. So that's pretty good. Not a bad idea if you have cash laying around. Where do I put it? You know, things have run up this year, so treasuries may not be a bad option. Okay, so I couldn't fit everything on the board, so let's talk about crypto. So Bitcoin has dropped a little bit, but it has not crashed, right? So it is acting like a store of value, somewhat like gold, with a speculative edge. That being said, gold has risen from 2,700 a year to over 4,000 in the very recent past. So there's some speculation maybe there too. Bitcoin has held up pretty well. So it's acting like a store of value with a slight speculative edge. Crypto assets in general, it's hard to get away from speculation in those assets. A lot of people see crypto as a store of value and they invest in it for the long term. But there is some speculation in crypto assets. Many people have a small investment in crypto. The total exposure to crypto in the US population is somewhere between 15 to 20%. Okay? 15 to 20% of the US population has some exposure to crypto assets. That's a lot of people. If we have 350 million in the country, you know, that's tens of millions of people who have investments in crypto assets. That's a lot of people. If you compare that percentage, 15 to 20% of the US population has crypto, compare that to ownership of treasuries. About 30% of US citizens have US government debt. So slightly more own US debt than crypto, but crypto is not that far behind. Okay, what about stocks? Stocks have run up, right? We all know stocks have increased. I mentioned the volatility index in the stock market has increased. It was up to 22 yesterday. That's something people would prefer to not see, a lot of volatility in stocks, but that's kind of where we are. So tax loss selling is occurring towards the end of the year. If people own loser stocks and they have gains elsewhere, they may sell their loser stocks to have some losses to offset the gains they have to report. So there will be some selling of stocks towards the end of the year. This generally tends to happen at this time. So how have we done in stocks in general? The Standard & Poor's 500 is up 14.5% this year. 14.5%, really nice, you know, really good. You compare it to U.S. Treasuries. You know, Treasuries are reliable and stable. Stocks are volatile, but there's a big, you know, you're being handsomely paid for taking a little bit of extra risk by buying the S&P 500. So the SPY, the spider, the S&P 500 exchange traded fund is up 14.5% for 2025 so far. Now, the Mag 7 stocks, you know, the tech stocks, the AI tech leadership stocks, they've done pretty darn well. So here's an example. This is just one example, okay? The Chat Exchange Traded Fund, CHAT, you can look that up. That's the ticker, CHAT. That is up 53%, 53% so far this year. Wow, you know. 53% increase in that exchange traded fund versus the S&P 500 up 14.5%. The QQQ exchange traded fund, which is the NASDAQ 100 top 100 stocks in the NASDAQ, a lot of tech stocks there, is up about 20% for 2025 so far this year. So you kind of get the idea that, okay, the exchange traded fund that's invested in artificial intelligence is up 53%. So what should you expect going forward in artificial intelligence if things are, you know, jumping this high? So we're still in the beginning stages of the build out for artificial intelligence. There's one important thing to keep in mind about artificial intelligence stocks. When you hear a financial analyst say it's hard to make money in artificial intelligence, okay, just remember that a lot of products are having artificial intelligence built into them, and advertising has not yet been hooked up to artificial intelligence, not to the degree that I expect. When advertising is hooked up fully to artificial intelligence, look out. It's going to be, wow, money will be rolling in. One way that companies are earning money is, you know, unfortunately, there's no way to get around talking about this, is the reduction in staff that becomes possible with artificial intelligence. But in the future, going forward, is artificial intelligence, is it's run over? No way. ChatGPT has only been around since 2022, I believe, or 2023, and has not been around that long. And that was sort of the web browser. You know, what the web browser did for the old internet, which was text-based. The internet existed long before the first web browser, which was Netscape. came out in the mid-1990s. The internet had been around for a long time. Not too many people used it, okay? When that interface, the web browser, was added, it made it easy for the public to use, and the internet took off. The same is true for artificial intelligence. Machine learning and artificial intelligence have been around for a long time, but ChatGPT put a user-friendly front end to make it easy for more people to use. So we're at the very beginning of an investment in artificial intelligence. So I definitely would not count out stocks in artificial intelligence. Now, towards the end of the year, people are thinking in terms of stability. Let's hold on to our gains. You know, especially if you're invested in CHAT, the exchange traded fund, and you're sitting on a 53% return. It's like you don't want to give, you know, you want to be careful with that, right? And the same is true with the S&P 500, up 14.5%. So right now, this time of year, towards the end, people are thinking about stability and holding on to gains. But next year, with AI stocks, it's probably going to be off to the races again, most likely, because there's a lot of opportunity to earn money with artificial intelligence. That the early steps are being taken now, and in the future, it's going to be kind of incredible. So, but for now, the best store of value, you've got some choices. Keeping wealth stable, if you've had some gains this year, may mean simply holding on to what you've got, but not buying more. If you have spare cash, maybe consider U.S. Treasuries, like Warren Buffett is doing, and invest spare cash in Treasuries. So if you have any questions about this, I'd be more than happy to answer any questions you have. So please post in the comments. And I really want to thank everyone for watching. Have a great day.